Hello, I'm Chris Sarley, Investment Research Analyst at Fund Calibre, and today I'm delighted to be joined by Mark Hawtin, Manager of the GAM Star Disruptive Growth Fund. Thank you for joining us today, Mark.
Good to be on.
Let's start with the fund. Obviously, it very much invests in technology, but it's not a tech fund. Could you maybe elaborate on that for our viewers, please?
Yeah, so I think the philosophy behind the fund is very much to identify those companies that use disruption and use technology to drive their business models. I've been investing in disruption for over 25 years now. And if I go back to even 10, 15 years ago, I would always have been buying companies that sold technology. They'd have sold software or hardware or semiconductors and such like. Whereas today, if I asked anybody, list your top 5 technology companies, they'd inevitably have names like Facebook and Google and Tesla in that list. And of course, those 3 companies don't actually sell technology. They use technology to sell advertising in the case of Facebook and Google, and cars in the case of Tesla. So we look for companies across all sectors that utilize technology or disruption as their edge in order to drive their business models more successfully than their competition.
You mentioned it there. Maybe let's go a bit deeper. Could you maybe talk us through some of the advantages for investors who maybe pick your fund over a pure technology fund?
Yes, so I think that what we get through looking at companies through this lens is long-term growing businesses that are taking significant chunks of market share from the market in which they participate. This means that in many cases, they can avoid the fluctuations of economic growth, whereas many pure technology companies, particularly hardware and semiconductor businesses, they're very much at the mercy of the economy. When the economy turns down, semiconductor companies sell less semiconductors. And on a fixed cost base, that erodes margins. People are prepared only to pay lower multiples for that, and share prices can be quite heavily affected. Let's use the great financial crisis as a really good example of this. So big disruptive companies that we would invest in and companies in, say, semis and hardware, both fell somewhere between 60 and 80% at the worst point during that crisis. But since then, whilst things like semiconductors and hardware companies that are more economically sensitive have maybe gone up 5 or 6 times over 10 years, there are truly disruptive businesses that we try to identify have gone up multiples of that, 10, 15, in some cases more than 20 times.
You mentioned you've sort of been in this space for 20 years. Could you maybe talk us about, when you're thinking about investing, do you sort of identify themes that will lead to industry disruption in the future, and how they change, and also just talk us through some of those themes that you have currently as well?
Yeah, so that's exactly right. So we start by looking for the biggest and most disruptive themes. So looking at a historical example to perhaps make it a little bit easier to understand, if we go back 10 years, we identified the disruption in advertising. So advertising was a $500-600 billion a year global industry. And it was starting to be heavily impacted by digital advertising. So companies like Google in search or Facebook in digital mobile. And over the period of 10 years, digital has now taken about half of the global advertising market. So from 0 to a half in 10 years. That's a truly disruptive driven change, and one that we really like to see. On the other side of the equation are the traditional advertising agencies who fared far less well and have really struggled, companies like WPP or Omnicom in the United States. So that would be a good example of a theme and how it might develop. The clearest, perhaps, for most of us living day to day is e-commerce. If we go back 20 years, we bought almost nothing online. Now, depending on which market you look at, we buy as much as 20-25% of everything that we purchase online. Of course, during the pandemic, we ended up buying almost everything online because we couldn't do anything else. And so that really drove that disruptive theme. It gave it an extra leg up.
Okay. One of the holdings you mentioned a bit earlier, you've held Facebook for the best part of a decade, but you've recently sold it. Could you maybe explain why and the rationale behind that?
Yeah, so there are a series of reasons for this. So on the broadest level, I believe that we've been through what we term Digital 3, which is the platform era. It started with the smartphone the ability to connect billions of people with smart devices. And that generated the opportunity for these huge platforms like Amazon and Facebook and Google and Uber and Alibaba. And they've had the best part of their growth phase, I think, over the last 10 years. So I want to look beyond that. We're always trying to look for what's next. And I think we're moving into what I term digital 4.0, which is the connectivity of everything. It's the internet of everything, the internet of things, it's called sometimes. It's driven by things like 5G, by lots more data, by the ability to analyze that data much more aggressively. And that's going to hit and impact sectors like healthcare, industrials, financials, transportation. And so we're looking for ideas in that area, because that, I think, is going to be the creator of the next 10 years real superstar winners. So that's on a macro basis. But on a micro basis, we have to remember these companies now are beginning to become a little more mature. Facebook is an advertising business. We've been through a big cyclical recovery in economies. There's an expectation that growth will start to fall off slightly. And therefore, maybe advertising volumes, maybe the growth in advertising volumes declines somewhat. And so for that reason, I'm also a little bit nervous about the outcome for Facebook. And then specifically, they have a series of regulatory issues which they need to deal with. And I think those will act as a headwind for the shares over the next at least 6 to 12 months.
Another company you hold is Coinbase, which sort of is in the cryptocurrency sort of sphere. Could you tell us more about the stock and your thoughts on crypto generally? Does that fit into sort of digital 4.0? Just give us your views on that, please.
Yes, it does. So the theme is essentially, for me, the theme is the digitalization of trust. So the idea behind digital currencies is the ability to transfer between two parties without knowing who your counterparty is, in a way that can be fully trusted without having to use what we would traditionally have used in terms of a trusted counterparty. So we don't need to use a bank, for example. So it's automating that process of trust. Now, this is a technology called blockchain. And blockchain essentially stores transactions in a way that they can't be interfered with on a distributed computing network, so it doesn't rely on one single provider. And that can be used not only for cryptocurrency, but also probably you've read about non-fungible tokens, NFTs, artworks selling for tens of millions of dollars with a digital, essentially, copyright imprint in a sense. But also it will apply to contracts. The ability maybe for you to, in the future, buy a house or an asset to do it in an automated fashion without maybe necessarily requiring a lawyer, because the transaction can be done through a smart contract on the blockchain. Coinbase is targeting all of these areas. So it's important to understand that for me, Coinbase is an umbrella way to invest in blockchain and in all of those technologies. It just happens that most of their money currently is made from the trading of cryptocurrency, but they are running very fast to be the platform provider of all blockchain solutions. And that's why I find it really interesting.
Thank you very much for that today, Mark.
Pleasure. Thanks so much for your time.
And for more information on the GAM Star Disruptive Growth Fund, please visit fundcaliber.com.